Good morning, everyone, and welcome to the European crossover. And we have seen the euro dollar really take a drop. We actually, when you look here with the euro dollar, we're right just tagged that, or just above that 1504. Our stretch area, actually yesterday was going to be 1536 going into today, but of course, it's the Italian budget woes that are causing an issue. Also, some concerns about having their own currency. At least there was a rumor about that. And you can see the cash dollar index did make it to our bias chart resistance from yesterday into today, which is 95.68 with a coming up to a key fib level, 95.77 here at the 61%. One of the things that we had talked about was that on Friday we had got a close, and we pointed that out yesterday, close above 94.97. That would allow, as we talked about yesterday, a challenge to this upper level, which is 95.65 on a daily, but on our 2-hour chart, like I said, this 2-hour close just above this level here would go and allow a challenge up to 95.68. Hence, this was our bias chart resistance from yesterday coming into today. We also have the 61%. News goes and will move a market. We use the technical levels to go and assess or determine where our risk is. And we're going to move this out of the way. And let's take a look where we stand here, what's coming out on today for events. Be one moment as that comes up. So we did have UK housing prices rise only slowly again in September. And then we have Eurozone Producer Price Index, which actually was not bad. But like I said, the whole Italian situation continues to weigh on the market. Coming into the States, we do have NAPOM at 9:45 Eastern. That's New York Association of Purchasing Managers Index. And that's going to be it. So it's, like I said, very, very light calendar as we come into the States, basically a third tier data. So we did, as I mentioned, if you look on the 2-hour chart, the euro has come down here and just about tagged this 1504 level. We got past this 1536. We'll see how things going and stack up. We've seen new lows in the Australian dollar, which overall has held up relatively well, but new lows there certainly being impacted. And also, looks like we made it down to our area here that we're looking on the cable here. You can see this 29.56. We also had that in our bias chart, which we can go on and get. $29.56. There's our support, and take a look at our work. There we go. Come down here. And that was from our Asian update. After the breakdown from the pivot level of 30.56, there's 30.56, the red line. Market to target 29.56, confluencing with the 29.59, the 161%. Upside resistance would be 31.03. Well, we did make it down to our target there. And like I said, if you're with that ForexAnalytix, you have the ability to get going to get this analysis that we update continuously. That was coming into the cable for yesterday. And let's move this out of the way. So we talked about this market going down to 29.56. We have this level here Also 29.59, which we pointed out yesterday, is 161% of this area right here. Right there, right on the button. So you had a lot of good confluence there. Obviously, the dollar scooting up gave it even more pressure, but you can see here with the market hanging on, and finally went down to that level they were looking at, 29.56. Actually, even overshot it, got down to about, what, 29.42? That being said, let's go on and get into the news. But for those of you that are interested in the getting involved with the Forex Analytics, we've got all the pairs, including gold and everything, like I said, even the cross rates. And as I mentioned here, just with the euro dollar, you've got the macro outlook, candlesticks, basic technical, harmonics, and Elliott wave, whatever you like, whatever your interest is. Here was an intraday update that someone said looking for support down here at 115 is what they're pointing at, and we have come down here. Initially, we were looking going from the Sunday session to go and test key support at 1580 because we were holding above 16, and certainly we did that. And we go the stretch intraday, which was for yesterday, was 1536. Well, we got to the 1536 and then some. And we're starting to move up a little bit higher here in the euro. And let's go on and get into the news. There we go. Start with the Canadian dollar, which notches a 4-month high on the NAFTA trade deal. Soaring oil prices, the Canadian dollar strengthened to a 4-month high against its U.S. counterpart on Monday, boosted by a last-minute deal to salvage the trilateral NAFTA pact and a jump in crude oil prices. Investors are raising bets for as many as 4 additional rate increases from the Bank of Canada by the end of 2019. It's a really good day for the loonie, said Colin Krasensky, chief market strategist at SIA. Price of oil, one of Canada's major exports, rose to levels not seen since November of 2014 as U.S. sanctions on Iran loom and a NAFTA deal fosters growth for U.S. crude oil futures. Currency, which notched on Friday its biggest gain in 4 months, touched its strongest level since May 22nd at 27.83. Gains for the loonie came despite data showing Canada's manufacturing sector expanded in September at its slowest pace this year as the rise of production volumes decelerated and growth in new business was held back by global trade frictions. And we saw the Aussie, which we pointed out just a few minutes ago, break down here to new lows on this move. Okay. The Australian Competition and Consumer Commission said on Tuesday it opened an inquiry into price competition among suppliers of foreign currency conversion services and would investigate the ability of potential entrants to compete. The exchange rate you Google is not the exchange rate you get from the big 4 banks. The difference is known as the markup and is often a big part of the price consumers pay when converting the currency. A powerful Royal Commission inquiry into Australia's big banks and wealth managers has shined a harsh light on financial institutions in the country, revealing widespread misconduct and deception of customers. The Australian Banking Association and the inquiry's interim findings marked a day of shame for Australian banks with no excuses for the behavior that has been exposed by the Royal Commission. Wow, so pretty interesting to see how this may impact. This is probably more to do with the dollar, but certainly look like we were hanging on and all of a sudden the bottom came out. Let's go on and move in now to the sterling. Sterling falls to a 3-week low as the Tory Brexit divisions on show. Sterling's fortunes are being driven by headlines about May's proposal for Britain exiting the European Union in 6 months. Sterling spiked briefly on Monday on a Bloomberg report that the UK government could back down on custom checks between mainland Britain and Northern Ireland, a major obstacle to the Brexit. At her annual conference this week, May is defending her so-called checkers plan for leaving the EU, but critics, including Foreign Exchange Secretary Boris Johnson, who is due to talk at the Tory conference later on Tuesday, are openly defying her. The conference is a minefield for sterling, where trading from headline to headline, said world first head of FX strategy Jeremy Cook. He said traders are more focused on the clues as to whether Britain could be about to offer concessions to the EU on Ireland and other sticking points ahead of a decisive EU summit in late October. The bias for the pound is to the downside, he said. A concern for investors and potential downside risk for the sterling is the prospect of May's own party challenging her leadership. And on to the euro. The euro slides after Italian lawmakers talk up national currency. The euro fell to a 6-week low on Tuesday after a senior official from Italy's ruling party said most of the country's problems would be resolved if it scrapped the euro for a national currency, triggering a broad market sell-off. The euro also slumped against the safe haven yen and the Swiss franc, while the dollar surged to a 1-month high as investors piled into the greenback and sold riskier assets such as equities. Markets are highly insensitive to Italian political developments after the ruling parties proposed a budget with higher than expected deficit target, exacerbating tensions with other Eurozone leaders and worrying investors who want Rome to bring its debt under control. We're dealing with a war of words with the euro on one side and Italy on the other. There's a lot of headline risk, Credit Agricole Valentin Marinov said. Marinov said he did not expect the situation in Italy to weigh heavily on the euro in the medium term because there's no real evidence of a contagion that would worry the ECB. Most of Europe's losses came after Claudio Borghi, the economic head of the ruling League Party, said Italy would enjoy more favorable economic conditions outside the Eurozone. Borghi later rode back on the comments and said Italy's government had no intention of leaving the euro. Commerce Bank analysts said that even if the euro did not reject Italy's budget, it could still act as a handle for the euro, especially as some analysts expect credit ratings agencies to downgrade Italy's large government debt. Even if the subject of Italy seems to be remaining on the back burner for the FX market at present, market participants should keep a close eye on it. It can cook up rather rapidly, we think. The dollar, fears about trade conflicts between the U.S. and major trading partners, including China, have lifted the dollar this year and is increasingly confident the Federal Reserve, as the U.S. Central Bank looks increasingly alone on a tightening policy. So, I mean, this guy says he had no intention, but of course he said it. So the only thing I can think is, like I said, the concerns it has to Italian equities is the only thing that made him say, oh, I didn't mean to say it, even though I actually outright said it. So hence the worries that we're seeing here and just more further pressures. Moving on, Italy bond yields surge up to 4.5-year highs as legal lawmaker favors own currency. Once again, back in this situation about him being the possibility of Italy leaving the euro currency, and then also turn around and say, oh, I really didn't mean that. I mean, then why would you even say it? So obviously there's a risk here. And we talked about after the fall that we've seen here in the euro, people just weren't going to simply believe this. When we were making this run up here in the chat room, I pointed out we would need a 30-minute close above 16.19 to try and push this thing even further. And we quickly just kept on fading back till we slid back up below 16 and hung there until later on this morning we rolled back on those comments. In this environment where everyone is nervous, these comments just add to the risk-off sentiment, says Commerce Bank strategist Christopher Reiger. It smells clearly like the crisis days, he added, referring to the Eurozone debt crisis of 2010-12, when the breakup of the currency bloc was a possibility. Reiger said the market sentiment is also hit by comments from the European Commission head, Jean-Claude Juncker, comparing Italy with Greece. I would not wish that after having been able to cope with the Greek crisis, we'll end up well with the same crisis in Italy, Juncker said late of Monday. Italian 2-year bond yields are up 51 basis points this week alone, putting them on track for their biggest week rise since June. Trading volume in 2-year BTP futures in the last 2 days is the heaviest since May. Interesting here. And let's finish up with gold. It says gold here rebounds. Gold has been nudging higher as risk has been trading a bit unsettled in Asia, said Stephen Innes. Optimism surrounding a last-minute deal between the U.S. and Canada on Sunday to salvage NAFTA had increased the appetite for riskier assets, Gold has fallen about 13% from its April high, largely because of the stronger dollar, which has been boosted by a vibrant U.S. economy. I don't see the dollar doing much ahead of Friday's non-farm payroll data. I look for that very point print to drive the pace of the Federal Reserve's pricing rates higher, which I think will boost the dollar's appetite. Market participants will also be watching out for additional clues on the pace of interest rate hikes from Fed Chairman Jerome Powell, who will be speaking on the outlook for employment and inflation before the National Association for Business Economics later in the day. So we do have some potentially some tape bombs, but I don't really see Powell as one to go in and drop something that would impact the market too much. We're already, we've been continually raising and raising. We already had the pedal to the metal. One thing I think will come out is if he wants to put the pedal all the way through the metal. And there's really no reason to say anything ahead of the non-farm payroll. So I don't really see this being as, although it's out there, you could have a headline. I just don't see you get much juice out of the headline. I don't think that he would say anything. So with that being said, let's go on and move on now. To the bias chart. So we had a pretty good little breakdown here in the euro. Let's go and take a look at how we stand here on the daily. Pretty key if we close below 1538. Keep that in mind. That is very important if we're not able to close above 1538. If we're not able to re-grab 1538, that would open the door for further downside. So I think the market is going to go and try and reclaim 1538 on the daily. So we know that's going to be key support on the daily. And put this here. So whenever we put the asterisks here, I'm talking with a bit of a space here. What that means is that's when we're looking at a daily, and it's important for this market to go on and hold that, for that to try and hold that area, or in this case, reclaim it. So once again, looking back to the euro on the daily, this is the daily chart here. You can see this 1538 coming across, very key area, almost working like a pivot. You can see that as we came down here, found support, and shot right up. Came down here for support, you see, pop back up, came down, pop back up. Once we lost it, we came here to hold it, we lost it. It was the submarine horns, and lower and lower and lower she went. Same thing, we popped above it, the momentum changed, or the sentiment as we came back for support, moved right back up, back down for support. Here we are. It's important that we reclaim the 1538. Sometimes, like I said, you can have one day that closes below it, but you don't want to have 2 days. But it's going to be important for this market to reclaim 1538. Let's go on and move now into the 2-hour chart. Here's our level here at 1504, and they just about nudged it. The low was 1506. Pull that back. Right there. 1505. So only this is just one pip off from hitting that level. So you know where the risk is right here. It says 1504. They need to defend. So that's going to be our support for today, 1504. So if you think that the euro's overdone, your risk is to 1504, and that would actually be on a 2-hour close. So you want to, sometimes we'll look at it on the 30-minute, which actually I did have it here on the 30-minute, but that's just an extrapolation, or from the 2 hour and a half. But taking a look here on the 5th, right there. Seeing some headlines. German government focus on Italy says we think sticking to the rules of growth and stability pact are important prerequisites for good and sustainable economic development. That just popped up. So on the upside, what are we looking at? Well, you know, it's been the key level. We had that key level on Friday. Remember, that's at 1582. And on Friday, we talked about this level here when we went down here and how we thought the market was overdone. And we thought that we actually put our support at the time at 1578. The market ticked 8 ticks lower. And then we saw a nice rebound up to the 23% or just a hair above the 23% and a fade. And then yesterday, as the market started to rebound, we were just above here. Actually, we were starting to fade right here, just in the upper teens. And noted here that we'd need a 30-minute close in order for this market to continue to advance. We didn't get that. We slid back. And here we've rotated lower. And obviously, we're hanging around here. We're trying to do the best we could to hang. Let's pull this out here. Just hanging around here, and obviously it's the Italian news that dropped us down. So it kind of gives me the thought that maybe this market is, you know, a bit overdone. Just like we said on Friday, we talked about this market being overdone at the time because it had already fallen so much. So resistance on the upside would be right there. You can see that. We'll call it 1583. Well, let's see. Let's go with the actual body close, which is right there. 1581. And we'll just move this down just a bit if we can to reflect that. I like to go with those body closes. You can see that's even where the market was having a tough time getting above. So 1581. And let's take a look at cable. Now, cable, we just covered that. Our target, the downside that we're looking for in the analysis here in the ForexAnalytix, we pointed that out, is that let's see, I've got the chat room here. This is my own little thing with, I just have to redo it over here. But our target was for there's a chat room. There we go. And you got all the analysis laid out for you. So we were looking here with the cable. As I mentioned before, those of y'all coming in, you've got the macro outlook, the candlesticks, basic technical, harmonics, and even Elliott wave here. So I'm usually posting my stuff in basic technical, and coming into Sunday, there it was. After the breakdown from the pivot level of 30.56, the market is to target 29.56, the level confluence with 29.59, the 161%. So that's one of the advantages if you're into candlesticks, or you prefer harmonics or Elliott wave, or you prefer maybe using just a macro outlook. You have the ability to go in and have all that information available to you here with the ForexAnalytix, and lo and behold, look where the cable went to, right there, 29.56, even went past it, and there's 161%. I did point that out earlier. So we were looking for confluence, and there was 161% right there. So it made sense to me that that would be a downside target for the cable. Right there, 29.56. You see those nice touches coming across? And then confluencing with the 161%, a little bit of overshoot, and that's where the market decided to go to. So where do we find our resistance now? Market's pretty well oversold at this point. So I think that we would have to, you could see a dead cat bounce, although the mode is still very bearish. But if we were to see that, resistance is going to come into this bias pivot. And we've talked about this before. I could add more of the days further back, but we've talked about this importance. It goes all the way back here on the 3056, and why we have it referred to as a pivot. So that would actually be our resistance. It's a ways away, but I think you'd have to give that considering how far cable's fallen. So it's going to be 3056 for bias chart resistance. Overall, the cable is still bullish. We'd have to actually hold down here below this 29.56 now to, or stay in this area to say, okay, now we're going to go with a range, but it still has a bullish bent to it. Well, we just took a pretty good little dip here this morning. Now, where's support? Okay, well, we did reach our target here, 29.56, confluence with the 29.51 of the 161%. So I still like this area right here, but that was our target. Doesn't mean we can't push lower. So if you look here at this touch here, coming across, you got some good volume. So for today, and right here, so for today, we're going to go right there with support, which would be 29.15, although the market's fairly oversold at this point, I think, on a very short-term basis. But we are susceptible to these headlines that come out. So it's going to be 29.15, but this downside target worked out well. Let's go and move into the Aussie dollar. Well, we did go in and blow through some support here. We did have 71.86, and we actually made it down here to 71.63. There's the 86. There's the key level we were looking at, and if the market could go and pare back, and certainly the dollar strength taking us further has weighed. Also, we have concerns. We just showed that story with, looks like they're going to do what they call a Royal Commission inquiry into the banks, the big four banks, for abuses and deception of customers. Obviously, that helped weigh down the Australian dollar. So where would support be at this point? Well, let's go and take a look at a fib. We're right here at the 61%. We're actually just going to have to go right here, coming right across. It looks like we've started to recover a bit, but this is where the risk would be here. And we've already come off quite a bit. So let's go with just right here, 71.51 for support. So if you're thinking this is overdone, you basically know where your risk level is, 71.51 to our close. And let's take a look on the upside. With it just a bit higher right there. 72.12 for resistance. We get a little bit of a move back. Not expecting a whole lot. Obviously still bearish. Now let's go and switch into the Kiwi. Support for the Kiwi coming right there. You can see that coming across on this line. Matter of fact, right there. Actually, let's move this just a little bit lower. There we go. That would be 65.47. And let's see if that confluences with a fib. Actually looks like it'd be beyond a 61%. We'll take a look. Yeah, because we get the 61% at 65.78. Actually take us all the way down here to the 78%. So we'll go with 65.47. I'm going to have to give it some room up in here. So it's a long ways off, but it'd be 66.34 right there. 66.34. 66.34 on the upside. Obviously still bearish. And let's go move into the dollar CAD. We actually have a downside target here on the dollar CAD. I've got 27.53 that I'm looking at. Canadian currency holding up very well if you consider the dollar strength we see. Now this is on a daily, so I'm showing this to stand out a little bit further. There we go. So actually the daily support comes in at 64, but we got 58, and 58 we're coming from is actually from back here. If you see with all the touches in the body close right there, you see that? So that's where I see the most confluence here. Also 27.26 would be the 50% of this entire move here. Now when we go into the 2-hour chart, this is where I'm coming up with the 53. And that's what I've got, and I had since yesterday. Well, we've got 27.58, which is on that daily, but what I'm looking for is 53. It's holding up rather well, but one more downside swoop should take us down there. And we've got 27.26 as a 50%, so I still like this 27.53. As far as upside resistance, go straight up with the technicals. Just 28.91 right there. That's quite the fall here in the dollar CAD. We tried to make a pretty good run up in here and slid back. I have a good chance if we get down here, this 27.53. Now we know 27.26 is a 50%, so maybe we take a quick overshoot of this area. We've got some support, additional support level coming in right there, 27.31. That may be if they flush them out here, anybody that stepped in and tried to buy it, they have a good chance of flushing them out with a move below 50. So 27.53 is an area that I like, but you got a potential flush down here to 31 right there. And that 31 would confluence with 27.26, the 50%. Go. There we go. Well, actually, still off a little bit. There. So something to keep in mind, a potential flush all the way to 31. If that would give the opportunity right now, anyone who stepped in and bought the dollar CAD, they would probably have their stops. Maybe let's say, they would know that the risk was to 50. So they probably put their stops around, let's say 38, 35. So we could flush down all the way to 31, clean those people out. We know 27.26 is a 50% of this entire move. And so just be aware that there's a potential move all the way down to 31. Let's go on and go to the dollar Swiss. Wow, the dollar Swiss is still hanging up here. Look at this 98.57. That's our bias chart resistance up in here. Just going with the technicals, and that's where the market's bumping its head up against, which is 98.57. Well, we'll allow the market a little bit of an overshoot, which would be right there, 98.62. Yeah, we're going to move it. I mean, 98.57 is a very, very big level, but could they goose the stops just above that? Yeah, we're going to move it just 5. It's only just a lousy 5 pips up, but you can see where the market congregated right here, and you can see the body touches. See right there? All there, just stuck there. 98.62. So we'll actually put that as our resistance, just moving it up 5 pips if they want to make a move up there, but you know where your risk is. We've had pretty phenomenal run here with the dollar Swiss. And here's on the daily. Oh, okay, and 98.68 is going to be the 61% of this move. So maybe we can go and make a move up in here. They want to stretch it. Man, wow, what a, after this hammer bottom, look at this move. Pretty phenomenal move we've made over here in the dollar Swiss. Support is going to come in on a very short-term basis. See this touch coming up. Come right there. 97.72. That's 97.72. On a short-term basis, very short-term, we got this 98.04. They would take a pause, but where could they really move to if the dollar were to retrace back? Be 97.72. Just give it a little bit of room. And let's go move into the dollar yen. We've been hanging around this area, and we're looking here on the 2-hour, but let's move into the daily. This market looks like it's just itching to get to 1424. It pulled back just a little bit, but I think the reason it did pull back is we saw a nice little pop here in the bonds, which have been weak, and I guess it could be considered a little bit of a pop, but it's weakening a bit. But keep your eyes on these bonds here. This dollar yen, it looks like it wants to go up there and grab this 14.24. I know Blake was trying to sell it just above 14, but keep an eye on this. Obviously, if we see a pullback in equities, would certainly go towards that. You saw equities ease back. You know, the whole thing with the tariffs, and now with Italy, you just have to wonder about this. They may hang around until non-farm payroll. We're still holding up very, very well in equities, but we are kind of getting a little bit of a stall. But you got to give them props. They have held up very, very well. Let's take a look at something real quick. I always like to draw my support or resistance through the bodies, you know that. And we're holding up here. We'll have to see how this plays out. And this yen is certainly acting a bit on the tired side. But it still has the opportunity to try and make a grab up there to 14.24. But if we see a pullback in equities and people rotate into bonds, and bonds are very, very oversold, you could see this thing make a little bit of a come up here and then maybe do be looking at a correction. And certainly it's susceptible for a correction. Resistance is going to be, I'm going to still stay with that 14.24. Now, if we were to see a pullback in equities, where could the dollar yen target? Because we're looking at support. Well, for starters, this 13.17, but we could certainly make a move eventually down here to 12.11. So you'd easily be talking about 180 pips. But where can we go on and come back to for support? There we go. We had the 13.37. This is very short support, but I think, excuse me, the market is susceptible. So I think you have to look at, if we do blast through some stops. Initially, we were talking about this 13.37, but you have to be wary of that, because if they hit some stops, we could really start to fly. So I think we have to rotate this a little bit lower, and we'd be looking at 12.68. 12.68, and that's a long ways off. Let's, I tell you what, just initially right here, 13.04, because I think from here, this 13.37ish, you could bounce, and then they could attack it one more time, and they would clean out a lot of people that came in very late. And so we're going to go right there with 13.04. And let's go and move in now to the cash dollar index. Well, we had our bias chart here at 95.68. That's our bias chart resistance. And take a look at the daily chart. We know why we came up with that. Here's the 95.65 on the daily. And we talked about the key area here was on Friday. We said, this daily close above 94.97 opened the door for the market to continue to advance all the way up to 95.68. So when we take a look here on the 2-hour chart, we got that breakout above 94.68 on a 2-hour close, which targeted 95.20. We actually challenged the 32. We backed down, but remember, we held this 95. So yesterday we were still saying, hey, look, The daily close above 94.97 allows us to challenge 95.68. And here we had that level in place, and that's what we've come up to. Well, confluence with 68 is 95.77, which is a 61% of this move. And we'll pull up the fib to show you. So it's from high to low. And you can see the 61%. Very key fib here. We're kind of slowing down just ahead of that key fib. But our bias chart resistance has been the 95.68 right here from yesterday. Or really over the weekend. Because as long as this was open, as long as it got that daily close above 94.97, the market was able to, whether or not it got to it, target 95.68. Now 95.32 is key. We know that that's been key for the last 3 weeks, but we knew there'd be a bevy of stops here, and we hit those stops. Now, is it the chicken? Did the chicken come before the egg? And obviously the Italian news is what sunk the euro. The euro was just hanging on by its fingertips, just trying to hang on. It was the Italian news that sent the euro reeling lower, obviously tripped the dollar stops, sent the dollar moving, because the euro comprises 56% of the cash dollar index. So where's the risk? Well, there's our bias chart, 95.68. So at this point, let's take a look. We'll go on and put our resistance today at 95.77, the 61%. But this market is open to move higher. We've already come up here. We'll have to see how the market closes, but we have non-farm payroll, and there's not really any reason to not expect a non-farm payroll to be good report. What maybe everybody's going to be focusing in is on wage growth, and do we see that? And wage growth, we saw a good wage growth. We need at least 0.3, but if we got like 0.4, that would just ensure that the Fed's going to continue with pedal to the metal, and you'd see more dollar strength. So it's not a reason necessarily to go in and fight this. So for right now, it's going to be 95.77 for resistance. We got to our 95.68, which is our bias chart resistance, and from yesterday, and indicated the market would want to target after daily close above 94.97. So we're going to move this up to 95.77. Support now. Well, the support, which was resistance, now becomes support, 32. We'll just pare this back just a bit. We'll call it right there, 95.26. So support's going to be just a hair below this 32. It's going to be right there, 95.26 for support. And let's go on and move into the gold market. Well, one of the things we covered here with the gold, and let's go and take a look at the daily. Gold is basically spinning its wheels after breaking that 1197, and we're just kind of up and down, but we had the opportunity to break out of this range. The market a couple of weeks, 3 weeks back looked like it was setting this up for a little bit of a bullish move, and gold, for the most part, it was holding up relatively well considering the dollar strength. But eventually it was just too much, and we succumbed to break out of that 1197. We know that 1197, we're looking at the daily here, is a very key level, but I want to go and give us an idea where we stood for a further outlook. But getting here to the 1197, you can see here this is a huge level, and the market had gone back and forth, and eventually we broke below the 1197 area and pressured the market. Let's push this back here. and really cleaned out some stops. We had a bounce back, and we talked about this being our resistance area, and there was an Asian session. They started to slide right back and came back down. Now the gold is still trying to diverge from the dollar strength, and you have to give it its props, because here's the dollar really moving way up here, hitting that 95.68 level and then some. And gold could really be under a lot more pressure. We still have that downside target of 1179. I think that we cleaned out so many people here that the market's just kind of bopping around, I guess, determining where it's going to go in and find its next catalyst. And I guess you're thinking, okay, now risk off is on, or maybe it moves with the euro, maybe it moves with the tariff news. It's just, I think at this point, I think you knocked a lot of people out of the box, and we're just kind of, as we mentioned yesterday, it's almost like a car stuck in the mud. You put it in drive and your tires just spin. You put it in reverse and your tires just spin. And I think all we've done is come back to what was key support, now resistance, fell back, pretty decent amount, rallied back up, fell back again. And I think the only way the gold will make another move low here is if the dollar takes out its highs. But I have to admit that it's holding up very well. So until it does it, it's going to be a wider area that we're looking at. So it's still going to be this downside target of 1179, because I think it's susceptible, and the resistance is what used to be very key support. You can see that, which is going to be 1197. So that's 1197 on a 2-hour close. Even here, I mean, they've put their head just above it, failed, put the head above it here on 2 back-to-back 2-hour charts. Still have not been able to close above 1197. So that's going to be our resistance. Now, in order for this market to turn bullish, I don't think anybody is going to trust this market. Unless we get a daily close above 1219. It's just not going to happen. I mean, even if we were to come up to 1208, we would need a 2-hour close above 1208 just to stop the bleeding, but that doesn't turn it bullish, because you've already seen here, we rallied up in here, failed, rally, failed, rally, failed. No, this market needs a 2-hour close and a daily close above 1219 to turn it bullish. Nothing short of that is not bullish. You could say if we break out of here on a very, very short intraday type basis or over a day or two, it could be bullish. But all that means is it's just going to go and run up in here and run into a lot of headwind. So we take a daily close, as well as obviously a 2-hour close above 1219 to turn this market to bullish. In the meantime, like I said, it's trapped in the mud, spinning its wheels going forward and spinning its wheels going in reverse. Meaning we try to come down, we don't see enough follow through to 1179. We rally up, we put the car in drive, and we just spin our tires and we just slide all the way back down $9. We run it back up here, put the car back in drive again, and we start to slide right back down. So the market is just kind of in a mixed bag right here. I don't think there's a lot of participation. For people to get interested in gold again, it would need a daily close above 1219. And I think after the people who got knocked out of the box, this market, the concern or the fear is that we move even lower down here, especially with the dollars. I just don't see gold making any significant move until after NFP. Because if NFP comes in strong, it really would open the gold market to move down here towards 1174. But I will give it to gold. It's held up, because if you look, keep an eye where rates are, and you look at the bond market, it's held up very well. So the downside is still going to be 1179 here. Generally, we don't have these wide ranges, but I think right now you have to be very, very careful with gold. Wherever you put it on, know that you're going to have to, if you look at the short this market, be careful with 1197, 2-hour close above 1197 completely negates that trade. And the same thing, if you're buying it, you got to know this market is susceptible down to 1179. Moving on to the bond market, we talked about the significance of this 40-25 going all the way back, to 2009. We were below it last week. We finally, towards the end of the week, we look like we're going to get above it, and we start to slide back. And we've talked about how the dollar yen is finally playing catch up to where U.S. rates have gone to. And we're trying to still hold our own, although we've slid back in here. Tweeted out a story that James McGeever of Reuters pointed out, and we have the highest amount of shorts in 10 years, and I like to look at the 30-year, since I think it's 1995. So really a lot of pressure. If we were to see this market bounce back, it could, because there's so much pressure. But right now, it's still holding very, very low. We had our support down here, just going across the body touches. Appears that held up just fine. We had 39.23. There it is, 39.23, which has held the low there. Just going with the body touches for support. Resistance, we have for 40.15, and let's take a look here. Well, looks like that held the market so far. There's the 40.15, and the high's been 40.16, and now we're at 40.08, and the low's been on this bar 40.04. So not bad there either. We'll give it, you know what? We'll just go and keep that 40.15 there. So the 39.20, excuse me, 39.23 bottom ticked it right there. Just going with the body closes, and same thing here with the body open. 40.15, missed it by one tick here. I haven't done anything with bonds in quite some time, but it's a good market, but very, very, very liquid. Let's go and take a look here with the bunds. Now they're just reacting to what's going on with Italy. So we did have 58.65. Look at this market. It's just gapped up. That's what I'm saying. You have to, to me, if you're not day trading this market, I'm saying is you'd want to be very careful trying to hold this market overnight, because you can see what happened. This is all about the Italian news, and you know, people run into the safety of the bonds. Right here with this body touch comes in at 59.63. That's going to be our resistance, and actually that's where the close on this 2-hour was also. Once again, 59.63. Support on a short-term basis can be right there, 59.24. And that actually coincides with this top, which came in, I guess, 25. But you can see where the body open, closing open, 59.24. Well, obviously the Italian news weighed here on the DAX, so we took it for a pretty good little pummel. Same thing here. We're just looking at the body touches here, and you can see here came right down here, this 191. So we're support now. If we were to break, we'd come in right there with this body close, 12.211. Resistance will just go right there with this level, and also has to be this body close touch, which is 12,280. See that coming right across? We'll go with 12,280. And that already takes us up to the top of the hour. Dale should already be here. And thanks for joining here on the European crossover.
Nice job, Paulie.
Hey, thanks, Dale.
Way to go, my trading warrior brother. So I know that you told me last week when the dollar accelerated to the upside, you had a number where it turned good. And are we into the areas now? I missed your dollar analysis of resistance here up around this 5.5.
Yeah, we hit our target from yesterday, which is 95.68. And just to do a quick recap on that, let's go here.
Will you still let me come? Will you still let me come in and listen to you when you go? You know, when it's for members only, starting when? Tomorrow. Tomorrow is it?
Yeah, you know what? You're right. It is going to be for just exclusive to ForexAnalytix members. And it was actually this close above the 94.97, which was on the daily, that targeted then 95.68, and we just made it now to the 95.68.
I had a feeling that you had something up there. So, you know, we still have 1 day left on the sale. So, Paulie's not going to be here for free. And we've had him here for a month, so you guys could see how this could add value to what you're trying to accomplish. Also, the hours are a little bit more accommodative for Europeans and even the Aussies. It's before midnight for you guys. And I don't know about you, but I've listened to Paulie, and there are many actionable pivots, inflection points, targets, whatever you want to call them. And then after that happens, he gives you probable targets, objectives. So, you know, if you like to scalp, you've got a leader now. And so, you know, this is just another advantage being a subscriber. I mean, you just go through our team. I mean, before you click and join, you look at the team. And you've heard Paulie for a month. I know Blake has wanted Paulie on the team for quite some time, and you know, it's definitely an edge for people that, like, you hear Paulie doesn't like to take things home overnight too often, but he takes care of business. For people that like to get paid every day, at least that's their mission. You got to tune in to Paulie, and that means you have to join up today and get the best price possible. Yeah, that's the end of my pitch, buddy. And it's not a pitch. You know, I don't say things unless I really believe them. You know, when I tweet about all the talent that you know, the Steve and Blake and Stelios have brought together in you know, in a few years, I really think we have the best research and analysts in both quantity and quality out there. Because, you know, I spend a lot of time on Twitter, and I go check out other things, see what's out there. And I'm sure you feel the same way, Paulie, you know, that every day when you get up, you're doing a good work trying to help people navigate very treacherous waters. Yeah,
we have some great people in there, obviously including Amanda. Amanda is very, very active in the chat room and an excellent cable trader, to say the very least.
Yeah,
just a lot of good traders in there. Joe, Stelios, Steve, Blake. I mean, you can pick everyone's brain. Just a lot of activity and, you know, real good camaraderie as far as everybody helping each other out on trades or on outlooks, posting charts. And as mentioned before, is that you have the, you know, depending on what your flavor is, if you like basic, technical, whatever, harmonics, as well as patterns, Elliott wave. You just choose.
Grega, I mean, he's an award winner from FX Street. That's what I mean, you know. Yeah, you know, you bring up Amanda. Amanda and Joe laugh at what I said once, because I said, you know, Amanda trades, and she takes care of her daughter and herself through trading. And you know, one of the reasons I said it is I was brought up by my mother, a single parent, and also I'm a trader. And there are many times the pressure of trading, I'm married now, but many years I wasn't, the pressure of trading just to, you know, pay your bills, you know, so you're doing it at living. You have to generate a certain amount of pips every month to cover your nut. I just know how hard it was for my mom. And then I also know how hard it is for me at times, and everybody, to pull equity out of the market. And can you imagine having the pressure? I mean, Blake does it, Steve does it, but the pressure of having to make good decisions when you and your dependents count on it, tough. She's tough, man. That's all I could say. All right, buddy. Well, I'll still be tuning in. You'll see me there, and I'm glad to have you on the team, buddy.
Well, I'm certainly glad to be on it, and thank you very much for the kind words, and good luck for the day ahead.
All right. Thank you, Paulie.